people out there are screaming like price is crashing, wise individuals who are listening to me will be looking out for opportunities. Because even though we are accumulating, buying at strong support levels gives us an advantage. From the price action, we can actually understand that so that our positions in our portfolio will have a better average. Now, some also ask, why would you actually do that? When the asset is crashing like this, it's all the way down, it's 97% down from its all-time highs. Then my answer is simple. Fundamental of this asset makes me do that. And this is Frontiers. It's a well-reputable site. Now, this article is actually from that, and it's also so reputable and it is respected worldwide by entire research communities. Now, here the authors conducted a study about blockchain, technology, remittance, a lot more topic related to that of banking, the current banking, how it works and its framework. Now, if you read through that, you can actually understand that it is actually real. What we knew till now is actually real. This particular area, if you read through that, by unpacking the critical case of Ripple, this paper shows that blockchain application to remittance focus on profits, risk, costs, interoperability, trapped liquidity, and idle capital in correspondent banking accounts rather than the financial inclusion. So if you need the financial inclusion, the key is these parameters. Now, and as we actually move further in this particular document, say analyzing the study, we get to actually read much more. Say in particular, we get to read this. Ripple is almost the only case where blockchain correspondent banking and remittances overlap. Hence, a study of this company is timely and relevant to apprehend the tensions and opportunities inherent to the application of blockchain technologies to cross-border payments. Now, that is so cool. That really is so cool. Keep in mind, this is being said after talking about this area. This paper argues that the application of distributed ledger technology within the existing correspondent banking arrangement aim to reduce costs and fees and to mobilize idle liquidity locked up in nostro vostro. So Ripple, the company, talks about this. They are really talking about the reality of the current banking sector. This is achieved through interoperability, understood as visibility and synchronization of payments. We are looking at that by ISO 222, right? Payment system to and which with each other. Interoperability in turn enables real-time clearing and settlement of transaction. This is the area which they are concentrating, and they directly states Ripple is almost the only case where this can be done to this cross-border payments area. Now, if you can't actually find why XRP, then again, it's not just about cross-border payments and its messaging system. It is also about the locked capital, because that means liquidity. And it's also about settlement of the transaction, clearing of that payment, that you actually need a bridge asset to move from one currency to another. Welcome to the Scientific Investor channel, where we discuss crypto and science behind investing regularly. Now, this central bank procedure is happening in the United States. I agree. So Fed buying up loans. Remember, Fed also provides the same kind of support for businesses in other countries through other central banks. So there, they will need a bridge asset. Say they are moving from dollar to euro.
The Ripple technology is the opportunity for a corporate treasurer to free up billions of dollars of cash that's trapped, uninvestable in these operating accounts, and repurpose that cash for other aspects of their business, like perhaps they're buying back shares, paying down debt, reinvesting cash. And the reason why that is simply because we have are enabling a robust marketplace of cash accounts and deposits, which can be used to fund bank accounts, and those cash deposits are provided by third-party providers.
Here, it's actually clear, right? They are also talking or targeting directly about this trapped liquidity or the idle capital. That, there are FUD creators who will come out and say nothing as trapped liquidity, there is nothing as idle capital. There was writers or authors who call them, researchers, stating this previously, and during that time back, say a couple years back, or I think I exactly remember the date, but That fund was actually busted by Crypto Airy during that time. I didn't have a channel. I was really kind of listening to these other YouTubers who are actually doing excellent work. But afterwards, I actually thought actually need some kind of scientific backing for what we are stating. Yeah, what we are stating may be fact, but we need some kind of base for what we are talking. Like we are talking through this document, and say for example, I already read this document and I'm just stating my opinion on this. You guys won't actually understand from where it is coming, right? Even though if it is fact, you won't understand that. That's the reason why I'm going through these articles, taking guys through that. Now, in terms of adoption, you can actually see this article, which is June 24th. It shows you that a bank's transaction volume is pumping like 15%. And now, when you actually go through that, you can actually understand they are looking at a third party. Here in this one, it's Fireblocks. So they are actually this third party to connect with an exchange in mind. Now, based on what we know, Ripple, the company is going different countries. They are enabling exchanges to handle this asset, this movement. So when you actually look at Fireblocks, they are also doing the same. Fireblocks is an enterprise grade platform that settles digital currency transfers between members, its members and exchanges. If a bank has an issue being connected to a cryptocurrency exchange based on current regulations, and this is kind of dodging that. Going to another third party. Yes, this doesn't make even though this is happening, the transaction will be much faster and cheaper compared to having the correspondent banking system, and it also reduces other shits. But all the negative stuffs there are kind of being moved. And here, Fireblocks serves digital asset exchanges, custodians, banks, trading desks, and hedge funds like Swift serves the currency market. So they're not only concentrating on an aspect of that, but also being custodians, right? So they actually at these aspects as well, because future is there. Digital assets is staying here and it's never gonna go anywhere. Now, when we talk about Fireblocks, it would be clear if we go through this one. Say, for example, Fireblock increase security at Bitstamp. So they are kind of going through that, and yeah, it's a bit old. It's from April, but if you look at that, they are kind of ensuring that patient with them, and it also shows that the combination here that the two methods kind of failure from key management process and enables hardware-based authentication of counterparty transaction. That is where what we talked here as a third party coming in to clear that settlement purpose is being active. Now, for Fireblocks, if you look at this article from Cointelegraph, it actually that's loading up fidelity backed startup Fireblocks. So it's not actually alpha supported by Fidelity asset space, kind of disrupting the entire area, or at least getting attention from huge investors, which will be actually a market change effect, which will be having a market changing effect in the coming years. Now, yes, we do not have that regularity all around the world, and investors are kind of just dipping their toes. They're not actually jumping in and starting to swim. So this one, what we are talking about is party, which was represented as connection between the bank or an institution with exchange for what real-time settlement, both digital and cash payments that is happening. As the entire space is actually changing and the payments is kind of being disrupted due to new fintechs coming in, this is happening to unveil a new payments charter. So the entire regulatory side is coming out, trying to push one way or other a bit more clarity into this so they can actually succeed. Because currently it's not there. And everyone is actually waiting for that to actually come out. This one from Real XRP Boy actually shows one of that aspect. Now this is an old one from David Shaw's stating that bank's token can be used for payments and netting, but they can't be used to settle without millions of dollars being invested with no way to make revenue from that investment. So the idle or trapped liquidity or capital will be still relevant even if they are using that. So why might XRP be the universal settlement asset or the bridge asset, or at least capture a significant amount? This is kind of the answer. When we come back to that charts which we were actually talking about, why we are looking at a support area. Don't mind about your average being a bit a couple of percentage up or down, then it's okay for you. But if you're actually looking at your portfolio trying to average down, then you might be looking at it should be better if you look upper support area to buy in your position. Okay, for example, I'm actually coming up with the chart again because some of my viewers actually asked which channel you are talking about when we were discussing it in the comment section. So this is one of the channel which we are looking at, which is kind of a long-term bear channel here. And if this black line is kind of connected one which is extending back even further, and that actually shows you support and resistance area being connected there. Here price was actually rejected. Now if this horizontal support area, that also actually goes back to our previous bull run area, so that is a relevant respected support area. So currently we are kind of respecting that area, staying above that. So if we manage to stay above that, then we can actually expect a bounce from here to 0.2. If we break that, that's okay, that's cool, we are gonna start something new. But if we don't, keep an eye. After breaking this area, the next one will be this previously a resistance here, then we can expect it to turn as a support in this particular point. So the price actually comes around 0.16 if we don't manage to stay above 0.175. Break below that, cautious, keep your eyes open, check the price, because personally I will be setting my orders, buy orders around 0.16 or just 2% above there or 2% below there. If it doesn't actually hold, I'm not gonna sell those positions. I'll hold those positions and I will be waiting for another certainty to check where price is actually moving to. Now the price is actually dipping back below 0.14 or even wicking to 0.12. I'll actually keep some of my buy orders at area too. When we actually talk about the payment space and the central bank digital currency, this one from the mat actually showing you some new information. But as a scientific family investors, we actually went through this right previously. We actually went through all the figures and giving you the ideas which nations are actually working on this and which nation are actually stepping into the retail central bank digital currency and how this is gonna happen, right? So this figure is kind of familiar for some of you guys, but the importance here is as by the mat. IMF research on central bank digital currency is from June 20. One, right? So it's not actually old one, it's actually new. Now in this new ecosystem, look how is the money going to work. You're going to have a central party, okay, and the entire distribution phase with this particular asset from the central banks is actually based on their liabilities. And as we see that the central banks here, now why this is relevant, because this is so relevant because banks are again going in trying to buy up loans which belongs to small and mid-sized business, and they actually believe back over a long period of time. Now the amount here is $600 billion. That's not actually a small amount, and it's just for now. If this health crisis turns into an economic crisis, then you can actually think they are going to increase the amount much more. Now this is from US aspect, where this kind of the world central bank, now at least they're acting so automatically will have to actually do and support others to keep that dollar liquidity stable. So if you're actually looking into buy, keep your eyes on the daily chart, weekly chart, or at least monthly chart. Then if you're seeing an opportunity there, like say for example if you use the MACD, you can actually see on a monthly that it's kind of still going down, but this particular area you can see a change. The price actually reached that area, it didn't actually go below. Then again on this monthly candle you can see that the price actually went below that, but it came back up and closed above that, meaning there is significant amount of buying pressure there, which was seen previously here before that bull run, second phase of that bull run. Now this is not even the first phase of the bull run, so expecting a change movement is there. I agree. Monthly chart we can actually expect a sideways movement a bit more, and then expect a change in the market cycle, mark up phase. If you're actually buying, you're first looking at these, then the volume, how it is reacting, and then going into a smaller time frame chart to just take your buying positions, give you a better average. So that I'll say if you are going into kind of charts, then it can be a bit more complex analyzing that. So just use Hikinashi candles, kind of gives you a bit more clarity, reducing that volume outside, that noise outside. Once that noise is cleared, you can actually understand that not actually moving that right way. Using Hikinashi on a 12-hour or a daily will actually give you a perspective. Most of the time, Hikinashi follows what was previously happened. See, the red candle, you're expecting a red candle here. This is a red candle, so for example, I'm going to expect a red candle to 2. And once it changes, you can see it's connected directly to the upside. Say you're taking up a coin flip, and how many chances you have? 50-50, right? But if you're using this, usually I actually get at least 70 to 75% of time I'm right when I'm using this particular technique. Get the daily candle is red, then I'm actually looking much more opportunities. Then I actually go 1 hour or 4 hour chart. And then I use 20-day moving average. In that, I'm checking price is above or below. If the price is below that, then yes, that's a perfect time to buy. But if the price is actually below that, then that's not the time where I am actually looking to take out profits. This is an area I'm talking about accumulation, looking at area where you can buy and reduce your average. In a 1 hour chart, we are still looking at a bearish trend and where the price is actually going to the downside. So guys, hope you actually like the content, and if you did like the content, then do hit that like button, and if you are new here, please do hit that subscribe button. I'll meet you guys on the next video. Bye for now.